All right, let's get right into it. Today, we're going to zero in on a trading strategy that's all about precision, the SMC sniper model. And we're really going to focus on its most critical piece of evidence, the change of character, or CHOCH, so you can learn how to spot these high probability reversals and just cut through all that market noise.
And this quote, man, it just nails the whole philosophy. See, this model isn't about trying to predict the future. It's about reacting to what's happening right now. That blood they're talking about, that's trapped liquidity. We're talking about the stop losses of other traders. When those get hit, it provides the fuel for the market to reverse course. Our job is simply to see that trap being sprung.
So let's get real for a second. Why do so many traders struggle? Well, it really boils down to two things. They're trading randomly, and they don't have a solid, repeatable plan. They're just clicking buttons without a real edge. This model, though, is designed to be the fix, giving you a strict step-by-step process that gets rid of the guesswork. Okay, so here's how we're going to break it all down. 4 simple stages. First up is the hunt, where we figure out our direction and our target. Then we have the signal. This is the absolute core of the strategy. After that, it's the shot, where we pinpoint our exact entry. And finally, the aftermath, which covers all the crucial rules for managing the trade. All right, let's dive into phase 1, the hunt. You know, a sniper never ever takes a random shot, and a great trader never takes a random trade. It's all about preparation. It all starts with understanding what the market is doing and knowing exactly what you're looking for. This right here, this is your first and most important filter. No exceptions. Your trade idea has to line up with the bigger picture trend. And by just splitting the current price range into premium and discount zones, you force yourself to be disciplined. Think about it. You only buy things when they're on sale, in the discount zone, and you only sell things when they're expensive, in the premium zone. This one rule will stop you from fighting the market. So, if we know our direction, what are we aiming for? Liquidity. These are just the obvious spots on the chart where people put their stop-loss orders. You can think of them like little magnets for price, just pools of orders waiting to be grabbed. This model demands that price goes and attacks one of these levels before we even think about looking for a trade. This is the blood we need to see. Okay, now we get to the really good stuff. Section 2, the signal. This is the heart of the whole model. This is where we watch that trap get sprung, and we get our final confirmation that, yup, a reversal is actually happening. This is where we have to be precise. Now, this is a huge sticking point for so many traders, right? How do you know if it's a real breakout or just a trap? Well, a liquidity sweep is a fast, aggressive stab through a price level. It usually leaves a long wick behind, and then price snaps right back inside the range. It's a fake out. A real breakout, on the other hand, shows strength. You'll see big, full-body candles closing confidently outside that level. Knowing the difference is your first major filter. So after we see that liquidity get swept, we need proof. We need confirmation that this reversal is for real. And that confirmation, that's the CHOCH, the change of character. It's like the market is finally showing its hand. By breaking the little price swing that created the sweep in the first place, the market is telling us that the momentum has officially shifted. It's our first real sign. Okay, listen up, because this is absolutely critical. It is the one rule you cannot ever break with this model. For a CHOCH to be legit, a candle body has to close past that swing point. A wick poking through, that means nothing. Zilch. It's just noise. We need to see commitment from the market, a strong, impulsive move with a decisive close. That's your green light. Anything else is a warning sign telling you to stay out of the market. All right, so we've got our higher time frame bias, we saw the liquidity sweep, and we got that beautiful valid CHOCH. What's next? Well, now it's time for stage 3, taking the shot. This is where we find our exact entry zone and get ready to execute with absolute precision. That big, powerful move that gave us our CHOCH, it often leaves something behind, a little footprint. We call it a fair value gap, or FVG. It's basically a small pocket where price moved so fast in one direction that it created an imbalance. This FVG becomes our perfect little entry zone. We're always looking for the first clean FVG right after the CHOCH, because that's the most likely place price will come back to. And this is where the real discipline kicks in. Once you've found that FVG, your job is simple. You wait. You put your limit order right at the start of that gap, and you place your stop loss just on the other side of that original wick from the sweep. This gives you a really clearly defined risk. The key is patience. The second you start chasing the price, the setup is dead. you've lost your edge. So, we've taken the shot, but the job isn't over. In fact, you could argue the most important part is just beginning. Let's talk about the aftermath. This is all about protecting your money, managing the trade the right way, and actually learning from what you do. This is what makes a pro. This number you see, 0.5%, that's not a suggestion, it's a law. It is your #1 rule for survival in this game. By risking such a tiny, fixed amount, you make sure that a few losses in a row won't knock you out. It keeps your emotions from taking over and lets you execute your plan like a machine. So how do you actually get good at this? How do you build that unshakable confidence in the strategy? Simple. You collect your own data. This checklist is your tool for doing that. By tracking every single trade, you're not just practicing, you're building a real statistical edge. You'll figure out what really works for you. This data is what turns a theory into your own personal weapon. And finally, let's talk about the landmines, the things you absolutely have to avoid. Every single rule we've talked about has a mistake attached to it. Jumping in before the sweep, mistaking a wick for a CHOCH, fighting the main trend. These are the unforced errors that will drain your account. Just by avoiding these, you will immediately become a more consistent trader. So there you have it, the entire map from start to finish, a clear rules-based path to finding high-probability trades. But, having the map is the easy part. The real challenge, the real question is, do you have the discipline to actually follow it, day in and day out, even when it's hard? That's what it all comes down to.